Good morning, ladies and gentlemen. I'm sure a lot of you who have been there last evening may have had a tough time to come early, but thank you very much. All our speakers, panelists are all here. So what we can do is, I don't know whether there are any seats, but if you'd like to come up and occupy some of the seats, that should be all right. I don't think that unless there are any reserved seats, but it's okay. As long as you can see and hear, it's fine. So today we have our chief from the Professor Dale Pinto, who will be inaugurating our technical sessions. He is really the president and chair of the board of CPA Australia and the John Curtin Distinguished Professor of the Curtin Law School. So he's an academic cum professional. So we are very thankful that you are here with us, and yesterday also he was there. So as they say that we need to have more collaborations, I think that's what you also mentioned. We are happy that CMA Sri Lanka has been able to join with you all and work on a forward journey for the training and development of professional accountants. Then we also have our guest of honor, the president of the South Asian Federation of Accountants. I think some of our presidents are here. They are really the maybe the key pillars in the South Asian region. Mr. Humayun Kabir. So welcome, Mr. Humayun Kabir. Then we have our Vice President, Mr. Naika, our council members and invitees, ladies and gentlemen, and of course the sponsors. I know we have thanked them profusely for the trust and confidence they have placed in us. So today we will not take much time. We will get things started because we are really going to concentrate on our technical sessions. Technical session 1, it is really on navigating the new world order, geopolitical turbulence, and Sri Lanka's strategic economic position. If you see, this is really the current scenario that we are discussing. We have very eminent speakers, moderators, panelists, all who are top leaders in the private sector. Yesterday I was saying that we must have people in the public sector, but it's very difficult to find some people of your caliber in that area. So you should know that you are really the drivers of the economy of this country. So what I would now like to do is I would like to invite our Professor Dale Pinto, who will be inaugurating the session. So can I invite Professor Dale Pinto to kindly inaugurate the technical sessions of our conference, which is really on crisis, stability and growth, management accounting. That's the most important thing, not just a normal thing, but how a management accountant will look at it and will be able to take things forward. Thank you very much. Over to you.
Thanks.
You can keep it or?
Hang on. Yep. Okay, good morning, everyone. And firstly, and most importantly, congratulations to all of you for making it here this early in the morning. It's wonderful to see what I call the true believers who are here in the morning. So this saying goes, the early bird catches the worm, and in our profession, the early accountant catches the latest regulatory update. After last night's wonderful opening, today is really where we roll up our sleeves and we move from inspiration to application and from ideas to action. As accountants, we often joke that people think our job is all about just numbers. But anyone in this room knows that today's profession is so much bigger than that. Our role is to help organisations make better decisions, manage uncertainty and create sustainable value. And increasingly, we are expected to see around corners before anyone else even realises there is a corner. And that's exactly why today's technical sessions are so important. Now, we all know the conference theme well, crisis, stability and growth. And they're not just 3 words but rather they describe the world we're all operating in every single day. Geopolitical uncertainty, sustainability, artificial intelligence, data and analytics. And these are no longer issues of tomorrow. They are shaping decisions being made in boardrooms and businesses today. So our first session asks how we will navigate a rapidly changing geopolitical landscape and what that means for economies like Sri Lanka. And as management accountants, we cannot predict every disruption, but we can certainly help organisations prepare for them. Our second session then explores sustainability, and we've moved well beyond asking, what do we need to disclose? And now the real question is, how do we use sustainability to make better strategic decisions and build stronger organisations? Then, after lunch, we come back to everyone's favourite topic, which is, of course, AI. And here there are generally two camps. On the one side are the doomsayers, convinced AI is coming for our jobs, and on the other side are the optimists, who seem to believe that AI will solve every problem known to humanity. And to me, the truth, as it often is, lies somewhere in the middle. AI, in my view, will not replace professionals, trusted professionals like accountants, but professionals who embrace AI will almost certainly outperform those who don't. So the future belongs to accountants who combine technology with applying ethics, exercising professional judgment, and providing human insights. And finally, we'll finish off and round out the day with data and analytics. And if data is the new oil, then accountants are increasingly becoming the refinery. And we do this because we transform information into insights and insights into better decisions. What excites me most about today is not simply the quality of the speakers, although I think you'll agree they are all, as Professor Watawala said, exceptional in their fields. For me, it's the opportunity for all of us to learn from one another, to ask questions, to challenge assumptions, and most importantly, to share your experiences. Some of the best ideas you will take away today may not come from the stage. They may indeed come from conversations you have over morning tea, lunch, or coffee with someone sitting beside you. As I said yesterday, we're living through one of the most significant periods of change our profession has ever experienced. And that should not make us fearful. It should energize us, because accountants have never simply recorded history. We've helped shape it. So let's make the most of today, learn something new, meet someone new, leave with at least one idea that will make you a better leader, a better professional, and a better partner to your organisation. Thank you once again for being here, and I hope and I'm sure you will enjoy what promises to be an outstanding day of technical sessions. Thank you.
So I reckon we have set the stage, and we will invite the moderator and the panel to the stage. So let's begin without further ado by introducing the moderator. Many already know him. Dhananath, the Chief Executive Officer of the Advocata Institute, in fact a founding member thereof, and he's worked previously as an Associate Research Director with a leading market research agency. He read for his bachelor's in biosciences and biochemistry at the University of Colombo, and he also happens to be an Eisenhower Global Fellow. And speaking of navigating in a new world order, which is what this is supposed to be, speaking of navigating, Dhananath is an enthusiastic mountain climber and trekker. And he has even managed to get halfway up to the Everest base camp. So, you know, that's about the idea of navigation. So we will invite Dhananath, please, to be on stage. Then we have
With the keynote for this session, we have Mr. Hasitha Premaratne, who's Managing Director of the Brandix Group and overlooks its global business while driving overall strategy and the transformation journey of the company. Now, prior to taking up reins as Managing Director, he served as Group Finance Director and Chief Strategy Officer of the group. He also serves on the boards of listed companies in Sri Lanka and globally. He has an MBA in International Finance and a Bachelor of Science degree in Computer Science. He's a fellow member of the Chartered Institute of Management Accountants UK, the Association of Chartered Certified Accountants, and the Institute of Certified Management Accountants, Sri Lanka, CMA. He's also a Chartered Global Management Accountant. He was the winner of the Tutor of the Year award at the CMA Global Financial Management Awards as well.
then others in the panel following the keynote speaker will be Riaz Rashid, Group CEO of Sri Lanka Telecom PLC. He was appointed only this year. His vision is to enhance organizational performance and deliver sustainable growth. And he oversees the strategic direction and the operations and overall performance of the organization. He's a professional with more than 34 years of experience, and he has been with diversified business operations before entering the space in the telecommunications sector. And he has an MBA from the Postgraduate Institute of Management, University of Sri Jawatanapura. And his background is in pure sciences. He's a fellow member of the Chartered Institute of Management Accountants, UK, and other professional organizations as well. So that's one of our panelists. Then too, we have
Mr. Nandane Kanayaka, who's the chairman of Science City Cement Lanka Limited, is a fellow member of the Institute of Chartered Accountants of Sri Lanka and possesses over 30 years of post-qualifying experience at different management levels. He's also completed his executive education at the London Business School in the UK and leadership education in the International Institute for Management Development in Switzerland, both of which are, as you know, world-renowned business schools.
And then we have the Managing Director of Lanka IOC, Mr. Raghu. And he's with a BTech and with an MBA from the University of Pondicherry and has over 26 years of expertise in the petroleum sector, has extensive experience in downstream petroleum marketing, retail strategy, and business leadership roles in the Indian Oil Corporation. And currently, he's the Managing Director of Lanka IOC PLC, and he provides strategic direction to the company, as we said. And finally,
we have Mr. Talal Rafi, an economist, is based in Sri Lanka, but has served as consultant to the Asian Development Bank, European Union, DAI, and Shell branded operations in Sri Lanka. He also contributes as an expert columnist.
Right, so we would like to then hand over proceedings to Dhananath, and he will take it over from there and maybe invite our keynote speaker to initiate the innings.
Thank you very much. Good morning, ladies and gentlemen, and welcome back to the first technical session after yesterday's inauguration session. So I kindly invite all our panelists to take their seats. And since the introductions has been made, I straight away hand it over to Hasitha, but we are going to discuss what was briefed by the technical sessions chair, Dr. Sugit, was to give one takeaway as cost accountants and as professionals, what you can really do in terms of implementing in the business sector that you are in. So with that, before we commence the panel discussion, I cordially invite Hasitha Premaratne for the keynote session. Hasitha, over to you. Please put your hands together to Hasitha Premaratne, ladies and gentlemen.
Good morning, everybody. First of all, I think I must thank the CMA and congratulate Professor Vatavella for all the work that has been done to lift up the profession of management accounting at a time of turbulence in the world. The topic itself says what it is. So what I will try to do in the next 25 minutes is to briefly look at how this new world order is spanning out. I don't want to make it a geopolitical conversation because you've had enough of that, I'm sure, in media and everywhere else. But I'll try to see how it kind of summarizes into the impact what it makes to us. And when I say us, second part of the presentation, I'll try to talk about Sri Lanka's exposure and see some of the impacts that we have to go through and manage. And as a third part, I'll come to the management accounting finance profession, and as professionals who are seated here, what kind of a response should we do, what we should bring into the table, and how should we change our approach and the way of getting things done, and then finally, of course, come to a closing remarks. So that's how I want to take the next few minutes. To begin with, I think geopolitics is nothing new. We've been going through these type of challenges in the past, but probably what has happened in the last few years, maybe the last 1 year in particular, or the 15 months in particular, is that it has become a continuous game of creating volatility and change, which nobody in the world probably could predict. I think if somebody is trying to predict and take action, probably that should be an astrologer. That's all, right? And my take on that is that if you are looking at that kind of a change from a management accountant, from the finance profession perspective in your language, now suddenly the geopolitics has not just become a risk, but it has become a variable in your cost structure. And it will add incremental cost to manage this volatility, and obviously that will keep varying time to time based on different activities, events that take place in the world. So in that context, I think it's important to understand that from the traditional or the old assumption that we as finance professionals will look at things and say that this happened, therefore this is the impact on your P&L. So after it happens, we do a variance analysis, we say this is the impact. But in the new world order, we'll have to probably change the approach and say that the geopolitics will create cost. It's going to be a cost driver. And if it's going to be a cost driver, what's the impact and how are we going to minimize that impact to your P&L? So that change in mind, change and shift is very important, because at the end of the day, we'll have to get out of this. I'm not saying stop variance analysis. I'm saying you need to get out of the mind of only variance analysis, but move towards how we can bring this strategic foresight to forecast the future and come out with certain ways of approaching it. So if you look at the global world, so many developments are taking place, particularly if you look at the geopolitics itself, the fragmentation that comes in the trade, the sanctions that are coming in, creates so much of volatility and uncertainty in the export world as well as in the import world. So it works on both sides. And then the energy prices, particularly with what happened in Iran in the last 3-4 months in the Middle East, it had created significant volatility in the oil prices. And we know when oil prices move, pretty much everything in our lifestyle moves. Everything in our lifestyles become volatile. And that's a significant impact that we had to deal with. And then the shipping, freight. That's a third point, right? With all these strategic locations being under pressure, right? Be it the Suez, be it the Red Sea, be it the Hormuz, all of these under different types of challenges, and maybe Panama next, who knows, right? So different types of strategic locations coming under pressure, there have been significant changes that are happening. And tariffs, of course, like never before. Tariffs have been changed, tariffs have been used as import barriers and different aspects. But what happened last year was unthinkable, and in fact, something that nobody really expected it to happen in this form. And the tariff volatility has taken the world into a storm, not only just a trade storm, but also a political storm that has taken it beyond that trade arena. And finally, I'm glad that there is another session following up in a little while, the famous topic of technology and artificial intelligence, and that's now becoming real. Where I think the first wave has come to all of us. I'm sure majority of you are in the first wave of artificial intelligence. What I mean by first wave is use of these chat GPTs, Geminis, the Google Geminis, the other types of Claudes, etc., different types of AI tools to improve how you work, manage your calendars, do things better in life, and even do certain things like medical records to everything else by yourself to build your own knowledge and know-how. That I call it the wave one. But the wave two is the more significant one from a business and transformation perspective, which I define as wherever AI can come in and replace the human interventions and look at how certain part of productivity and efficiency gains can be taken to 3-4 times of what is happening today. Now that second wave is where we are currently floating as some organizations. At Brandix, we are doing quite a bit of work in that second wave. Of course, few breakthroughs, but a lot of work to do because the buzz and the word is big. The reality on the ground is not so much. So how do we make that big gap between the buzz versus the reality narrower as possible is something that all of us have to work towards. And I'm telling you it's happening. I'm telling you it's possible because I've seen it and been there. But of course, you need to carefully manage the change and ensure that it's embedded in a sustainable way. Otherwise, this can become a different problem. Overall, it can end up in a governance risk and a disaster if you don't manage it carefully. So essentially what we are trying to say here is that the new normal is not about one crisis, but it's more about how it's becoming a continuous volatility and crisis becomes order of the day. I'll just take one example, how this recent Middle East challenge hit all of us in our day-to-day lives, be it the businesses, be it in the individual. The first reaction we saw was the oil prices going up. And with that, we also found that the logistics costs, the freight costs started to go up, the rates, all of that started to increase within a very short period of time. An immediate impact is the exchange rate started to fluctuate, and you know the Sri Lankan currency, which was stable for some time after what happened in 2022, suddenly got into a major challenge. But of course, later on it was brought under control, but certainly within a short period, it started to move in the volatility and the uncertainty that it was living in. And that led to inflation. Already we are seeing the inflationary impact coming in and more to come, I believe. And certainly the cost structures have seen a very different place. The other part of it is the working capital. Now I'll tell you an example from our world, Brandix apparel industry point of view. We import, like some of you, we import raw materials from different parts of the world. So we found that while we were worried in the initial month of this volatility in the crisis to secure fuel to run our operations as the priority, in a month or two, we found that our production is impacted not necessarily because, actually not because of fuel, because we didn't have any disruption because of fuel, ultimately because we managed to secure as a company as well as a country. But what we were seeing is that we are getting challenged because of the raw material availability being a challenge. And that's because the vessels were missed and the vessel lines have changed the routes. And suddenly you found that 2, 3, 4 vessels change, and then the raw material, the fabric doesn't come or the elastic doesn't come. And if you don't have the elastic, you can't stitch the garment. So your production lines are now open. So that became a challenge. So what did we do? Immediately we had to increase the buffers, meaning if we are taking 30 days to shipping time, if we are not traditionally keeping 30 days, we had to add another 10 days more and say, okay, let's put another 10 days more and order with a 40-day lead time so that you give time, even if one vessel misses the other vessel to bring the goods. Because the cost of open capacity or cost of idle line is much, much more than what we are talking about in the context of a freight cost. So while the freight rates went up, we had to increase 30 days to 40 days and our working capital duration went up. And what does that mean? Ultimately, that's about cash. Ultimately, that's about interest cost. Again, it came and hit the P&L, it hit the margins, and something that initially we didn't anticipate, but it came in as a hidden cost which added up later on. I'm sure all of you would have experienced these things by now. And if not, just look at your context of risk management, because at the end of the day, it's good to add that 10 days and manage the raw material inflow rather than taking a hit at the last point and say that raw materials are not there, therefore I can't produce, my production lines are idling, and then I go to deliver, I have to not sea freight but air freight, and that's where the bigger cost starts coming in. So it's about thinking around the bigger picture, understanding the overall cost and see where you need to buffer to mitigate some of these risks that are coming in. And that's why I said at the beginning that it's now becoming more of a game of building in scenarios and ranges rather than trying to focus on a single point of a forecast. Because at the end of the day, our budgets now have been questioned and challenged in terms of not only the approach, but also the way we build the numbers into it and the assumptions. Coming to Sri Lanka, I don't want to take too much time, but I think all of you are aware of some of these dynamics where our vulnerabilities, particularly due to the external exposures, the energy cost was now one of the biggest challenges we initially faced, which is true even today. We've seen this continuing for some more time. The freight reliability, I think good news is our ports were very efficient despite the challenges and managed quite a bit of the volatility that was there. It was a global impact, but of course, this was something that initially was very, very challenging. But this is also can turn into an opportunity if you play the game well. And then, of course, the exchange rate, like I said before, the export demand so far is holding, but vulnerable, and we need to keep a close eye, especially because the export markets like US, Europe, whether there is a possibility of a slowdown. So far, we are not seeing it, but I think something that we need to be conscious about. And the tourism flows. Again, tourism was at its peak in February, just as we saw that the tourist arrivals were picking up and hopefully booked. And suddenly when the flights were not available through the Middle Eastern countries, routes, that led to a challenging environment. And as a result, the tourism flows started to get impacted. So all these vulnerabilities stand. But how do we really look at our strategic assets, particularly our location, then our export capability, the private sector agility, like Professor said before, and then also the professional talents, right? How you will shape up and change the world and the new dynamics that are coming in and ensure that we build governance and trust as a strategic asset in our differentiation. And ultimately, as a company, I think you will have to look at how prepared you are and how diversified you are, and how, in terms of not as in locations alone, but in multiple ways, but also to see how to bring that financial resilience with a stronger balance sheet in your hand. Because more the strength of the balance sheet, more the strength of cash, that's where you will fight things back. So essentially, from a country perspective, I think it's not about growth anymore. It's about growing under these shocks. How sustainable is your growth? What is the capability to absorb some of these shocks in the context of these challenges that we have to go through? Then, from efficiency that we were driving in the past, right, where we were talking about the cost as the top priority, cost remains the top priority, I must tell you. But having said that, you need to look at the big picture, like I said, the overall cost. So essentially, that's where the new model need to focus on the resilience. Just to touch on a couple of points, while we talk about single cost line item savings in the past, now we will need to look at holistic cost structures. Sourcing structures may look at not just one line item, but look at, like I explained before, what is the bigger impact of cost. And in order to mitigate one big cost, you might have to pick a higher expense in another line item. Then, of course, talk about the inventory. We always talk about inventory reduction, like my example before. Sometimes you may have to buffer up your inventories. So from your just-in-time thought process, you might have to now move in to think about just in case something goes wrong, what's the challenge? And we always say that we are living with the risk, but certainly what are we doing about it to overcome that challenge? Then the geographical risk spread, and also from a budgeting perspective, I think it's important to look at not just to have a single control budget, but also to see how the budgets have scenarios to meet the challenges that you need to go through in your current geopolitical challenges. So resilience essentially should not be seen as an inefficiency, but it has to be seen as a cost of staying in the game. And that's the mindset change I was talking about earlier, because we attack the cost. Sometimes we attack the cost line items which are easy to attack, but later on we realize that, oops, that's not the place where you need to attack, because you reduce that 10 days of working capital, you might end up spending millions of dollars air freight in the goods ultimately. So looking at the big picture becomes important. And don't forget, this resilience will have a cost embedded with it. So Sri Lanka's strategic choice, I think that's where we need to look at some of the new changes. Of course, how do we turn these geographical challenges and the locational advantages into logistics, reliability, and trusted services so that we can change our challenge into more of a competitive advantage, and also look at some of these low-cost products and move towards high-value platforms, be it apparel, be it other exports. How do we use our limited capacities and see how do we move up in innovation, newness of a product, and then see how you can demand a better price. Because at the end of the day, value creation is what is important rather than just keeping the volumes going. Then on the governance and transparency, today the country's theme also has been around that. How do we move that as a strategic asset? Can we look at that as a case for investments to be looked at? And then new markets like India, which is emerging, grooming, world's fastest growing economy is next to us. What are we doing about it to change and capitalize on some of those opportunities that stand in front of us? And then some of the new markets. What are those markets and how do we reach out to those markets, Middle East and currently under challenge, but African and some of the other markets, which over the next 10 to 15 years will emerge and become significant forces for the world. And finally, I think it's very important that resilience is built into our brand, meaning that Sri Lanka was known in the past as a resilient nation. Why? Because we used to go to school, at least during my time, and a bomb goes off, next day we wake up and we are back to school. Whereas when we tell some of our friends who were living abroad that we did that, they were saying, oh my God, how do you do that? How did you even think about it? But today, that resilience we had during that early days of our life is helping us. And I don't know whether the next generations are having that same level of resilience being built, but I think that's something that is very important because now we are seeing some of the other countries, our competitive countries, have built more resilience than us. In our industry, Bangladesh, Vietnam, Indonesia are seen more resilient than Sri Lanka now, whereas maybe 10 to 15 years ago, Sri Lanka was seen as the place of resilience when it came to the competitive advantage. So we need to bounce back. We need to fight that back and bring that and embed that into our brand so that resilience becomes a strategic tool in this global environment. Final section of my presentation, I want to now come to the profession, management, accounting, finance profession, where always variance analysis, like I said, reporting, right? Being a historian, being an interpreter, that's part of the job and it has been a large part of your job in the past. But over the last few years, I think you've seen the transformation of your job role from being a historian, being a reporter, being an interpreter, changing that towards more navigator and architect. Now, what is this navigator and architect? Essentially, supporting the business, supporting your CEOs, supporting your business leaders to understand the volatility, the risk of that volatility, and then the cost and the related implications to the P&L. It's your job to design and be the architect of the new P&L that you have to drive in these type of environments. For instance, you will argue that in most cases that traditional budgets are annual budgets. And we talk about 3-year plans, 5-year plans. It's good to have those, but also don't forget today the priorities might be a 90-day sprint. Because if you can predict the next 90 days, that's great in today's world. That's great. So that's what you should really look at. I'm not ditching, I'm not saying that budgets are bad or 3-year plans are bad. You need to have those to see where you at least started your point of planning. But what is more important is to see how your short-term sprints are working. Are they navigating and are they connecting to the bottom line ultimately to drive the goals and the targets that you set? So you need to change more from control to foresight in your approach that you take in your finance management accounting profession. Also, very quickly to touch on, I think the key in this type of environment is to build scenarios, like I said, short-term sprints to see where things are changing and bring the sensitivity around the key variables. And the key variables, I've just listed a few in this environment, but could be many more, depending on your industry and where you are. So you need to look at how these sensitivities are impacting your P&L and how you need to bring them and embed into the budgeted scenarios so that budgets no longer should be a single line or column, but it should have these different scenarios being embedded. And you need to keep measuring based on what triggered at what point. And another important thing that probably we need to talk about is bringing in the resilience into some measurement. And I think as management accountants, you have a job in your hand to ensure that resilience is measured and rewarded as well. Because the teams in the organization who have managed supply concentration better, route flexibilities in your logistics better, maybe the inventory logics of how you need to, like I explained, whether to increase or decrease the inventory position time to time, who have done that better. Likewise, cash conversion, customer experience, these measurements, these areas can be seen as ultimate measurement scores, and see whether you can actually embed them into your goals of the organization and bring a measurement and see whether they can be, those who do well, to be rewarded. And that will create a culture of resilience in the organization to drive. So goals, I think it's not that we are saying that you have to have perfect predictions. Like I said, you'll have to go to astrologer for that. But it's more about being prepared for the volatility in taking some of these key decisions. So to conclude, before I conclude, just one final slide to talk about the questions that you need to ask yourself in your next budgeting cycle. As management accountants, your key focus is about looking ahead, your 3-year plans, your 1-year plans, and how we are going to look at this. And this volatility and the new world order need to be embedded into your assumptions. And the assumptions will have to have certain geopolitical scenarios, and based on those scenarios, you need to structure your budgets accordingly. So that's number one, right? Number two, you need to have those variables, like I said, identified and trigger points for each of those variables. For example, if the Sri Lankan rupee crosses 350, that's a trigger point. At that point, what will it be the impact to the organization, and what set of decisions or actions will you enforce in order to make sure that you're mitigating the risk? Same way, oil, if it crosses 100, you know the overall local fuel prices to raw material bases to logistic costs to other exchange rates to inflation to everything is going to come and boomerang at you at some point of time. So without waiting till such time, where would you trigger that move and certain decisions and actions? So you need to have those action plans in place with trigger dates or trigger points. And after that, essentially, you can be ready and you can be prepared. And sometimes you might not trigger the decisions, all the decisions, but at least you have the list in your hand and you're aligned as an organization on how you should approach. Think about it, right? Third one is about, of course, the customer, supplier, and risks. Normally, we tend to narrow and go deeper into some of the customers and try to see how we need to make those customers more profitable, which is a good thing, but also narrow and deep alone might not work in the new world. You need to broad base your customers, suppliers, as well as your exposures in your foreign currency to strengthen the balance sheet. And then base case stress testing is very important. And also from a funding perspective, I think it's also important that the funds are allocated, the investments are allocated, looking at these resilience-related implications and some of the inefficiencies that are building up today. So, in my opinion, when the resilience bill is cost, it's going to add the cost, and you can't just pass on that cost to the consumer. It can't pass on to the customer. In our industry of apparel, it's a global industry. We are fighting the whole world. If we increase the price today, Bangladesh will offer a lower price, or a vendor in Vietnam will offer a lower price, and the order will move. We'll lose the business. So when the crisis hit last year, particularly with the tariffs, first thing we did was we took a decision that we will first take the orders, whether they are profitable or not. And believe me, when the tariffs were at 20%, India was at 50%. In fact, most of the orders were not profitable when we took it. But after we took the orders, then we went in deeper and said, what do I have to do differently to make these orders profitable? Check the raw material rates and the prices. Go back and look at the wastage, consumption, YYs, etc. Look at how the logistics routes can be optimized, overheads can be optimized. And even the people structure, all those aspects had to be questioned. From good to haves, we might have to end up with only the must-haves. And we did that in a period of 4 to 5 months, and majority of those orders that we took at a loss, we were able to turn into profits. And of course, when the tariff pressure slightly went off in February 2026, that really came in as a handful, because all those tough decisions that we had taken during the tough times helped to turn things around. So those type of different approaches will be vital for you, because I think during the budgeting stage, right, you will have to take that view very carefully with triggers and different measures, and your budgeting approach may have to shorten even at times and can change how you are playing the dynamics. So that's the message I wanted to share with you, and I hope I gave an initial starting point for this panel discussion to take it to the next level. So to conclude my presentation, I think from the crisis, how do you make it an opportunity to grow? So number one, the first principle you need to keep in mind is that the future will be more volatile than the past. Don't ever think that tomorrow will be easier and better, this pressure will go off. I mean, I've been waiting for that day for a long time. It has never come, believe me, right? And it's going to only get worse. Second part of it is, I think, the resilience. Like I said before, how do we use that and make it a brand and convert that into a competitive advantage? If you demonstrate the resilience, your customers will come behind you, because volatility means you need suppliers who are resilient. And the resilience itself can become your next wave of positive or the competitive advantage. And finally, like I kept saying through my presentation, management accountants must become now architects of strategic foresight, looking at the future, design the future of your P&L of the organization. Think about changing the processes that you have set in the past, and look at these new simplified processes and ways of working, because ultimately you can't have the old legacy processes and the new world order. You can't. You will have to go back, sit down and see what are the things that I'm going to eliminate, what are the things I'm going to simplify, what are the things I'm going to automate and bring artificial intelligence to ensure that I improve and enhance the productivity. And then finally, what are the things that I'm going to use and convert into my competitive advantage? And if you do that, I think at the end of the day, it's about not trying to predict every single event or the crisis that's coming on your way, because that's almost impossible in the world we are living in. But it's about building your organization to absorb some of those shocks and still move forward in a volatile world. Thank you very much.
Thank you very much, Hasita, for that very insightful keynote. I'm sure there were multiple takeaways, and the final message is that there's a new competitive advantage that is brewing, that is resilience, and as accountants, as professionals, that you have to become a navigator and a strategic professional rather than just becoming a historian and an interpreter, which have been the tradition of the profession. With that, I would like to quickly move on to our panel discussion. As you know, as the brief, what we are trying to get, the objective of the panel is to get some key practical things that already these multiple industries have done in their respective industries, so you can go back and copy it. Or like think of the framework, how these professionals are thinking about it. We'll give Hasita a little bit of a rest and a break after a 20-minute solid keynote. I would like to start with Raghu, because as Hasita mentioned now, when geopolitical risks are there, everyone's cost changes. But Raghu, in your industry, when you change the pricing and cost, it affects almost everybody. So with the geopolitical reason, it's not only about the geopolitics, it's about the maritime, it's about AI, with all that. How a company like Lanka IOC, especially in the energy sector, thinking about controlling cost in an environment which is beyond your control? Of course, you can do very little of what President Trump is doing, but how are you going to control, and how do you think of a framework of bringing down the cost? Because it's not easy to pass all the cost to the end consumer. Can you shed light on that, and we'll start from there?
Good morning, distinguished guests and President of CMA and all the fellow professionals here and panelists here. This is a question which we have been navigating for the last more than 4 months, and but it is not 4 months. If you see, the whole industry has been in turmoil since the COVID started, and so over a period of time we have dealt with this situation. If you look at Lanka IOC per se, see, in a oil industry, the majors who are there, they are involved in the whole gamut of activities, whether it is upstream, where they are into uh, getting the fuel, crude oil, or it is refining and then sales. So when you are in the whole gamut of activities, you have got a lot of avenues to look at the cost and look at how you are going to deal with your final product. But in case of Lanka IOC, you must remember one thing, that we are not there in the first two slabs. That is, neither are we into production nor we are into refining. So the game starts from where we are sourcing. So the challenge for us, we have got a lot of what you call challenges, in the sense that we cannot control what is happening in the atmosphere. And on top of that, as Hasita was saying, that resilience has a cost. But for an industry like ours, the product at the price at which we are selling, we are not able to decide. So that also acts as an uncertainty. So these are the challenges which we face, but over a period of time, we have started working on it. How do we do that? Number one, we try to diversify on both ends. One is how we source the product. Diversification means that we are constantly looking at various vendors, various locations from where we can source the product. Secondly, we also like to diversify into products which we can sell. See, there are quite a lot of products in our industry which are not price controlled. So we try to diversify that. Our pie of sales, though still highly tilted towards auto fuels, but if you look at over a period of the last 20 years that we have been in Sri Lanka, our total what do you call portfolio was about 87% to 90% auto fuel, and the rest of the fuel was 10%. Now we are standing at 75-25. So that is one of the hedges we are doing. Secondly, if you look at our cost control mechanisms, we are very much into our management accountants are constantly monitoring that, in the sense that where we can reduce costs, we operate a very, very lean organization with very minimal leakages. And at the same time, I am very confident that we supply the best products to the customers in the country. So that is where we look at our cost optimization. Third, and most importantly, we are also looking at working with the various stakeholders. The stakeholders, see, when we are working with multiple stakeholders during normal lean times, that is when they come into play, when the times are tough. So that also is a very important thing. Fourth, we are able to manage adequate buffers, in the sense that, see, buffers will not help us for long, but when the trouble erupts, the buffers act as a sponge. We were able to get some time to take decision making. And then we absolutely take pride in the quality of decisions we are making, our agility to take decisions. We are always probably at the right time to buy the product from the international market. If you look at over a period of time, when you have looked at the news in Sri Lanka, I think at Lanka IOC, we have done the procurement at the best possible rate in the Sri Lankan market. So these are some of the things which we do, continuous looking at the market, continuously looking at the risk management, how much risk we can manage, how much we can pass on. And finally, if you look at the various scenario buildings which we do. But at the end of the day, I would like to say only one thing, that in all these processes, how we manage our costs, etc., our mandate remains the same, that at all possible opportunities at all possible stages, whatever may happen, whatever may be the disturbance in the market, we will continue to keep the supplies going. We will continue to keep the energy security going. We have the customers and stakeholders at the center of all our activities. So in this period, our balance sheet also helps in the sense that over a period of time, what we have built in our balance sheets, that helps us to take the hits today. There is no doubt, everybody knows that all the oil companies in Sri Lanka are taking major hits, but our balance sheets are helping us, and the fact that we have been quite financially disciplined when we are looking at our receivables or payables, or while interacting with various banks. So we are getting the best rates possible in the market. So basically, we are trying to squeeze whatever advantage or whatever cost which we can get from any place into our business. And so far, the going has been good, but we are keeping our fingers crossed because we thought that the situation has normalized. But again, I think the situation is erupted.
Thank you, Raghu. Thank you very much. Next, I would like to move to Mr. Ekanayaka. So now, even in Hasita's keynote, one other choke point that he mentioned was the maritime and the trade. And your industry in manufacturing is quite open for the risk of geopolitics, as well as especially on the trade. So can you tell us, for our audience benefit, one kind of permanent change or like move that you have made to avoid these geopolitical shifts? It could be on stock taking, or like in terms of any other channel to minimize the cost with this geopolitical risk. What you have done to navigate uh, in terms of a permanent change in your manufacturing sector?
Good morning, everyone. Also, thanks for inviting me to be the panelist. I think just for the benefit of the audience, cement manufacturing have three types of processes. One is the fully integrated manufacture, which we do actually as part of our business process, where we need coal as the energy. Cement is generally 70% is energy, either electrical or thermal. Then we have another set of manufacturing centers where we import the basic raw material, which used to come from actually mainly from the Middle East. Then, of course, we have a terminal in the Colombo port. You can actually, when the demand is high, if you cannot manage ourselves, you can import cement and bag it. So basically, in the first fully integrated process, you have about 85% local value addition. In the second stage, if you import clinker and produce cement, it's about 40% local value addition. And as we go down, the last category is only the packing. So when this crisis started, actually the main problem we faced was lack of coal. And this is a key component of our local manufacture, which is the highest margin process that we have in the country also. So it was actually not the source that we had a problem, because we are sourcing coal mainly from Indonesia, from the Kalimantan mines. The ship which was supposed to call on the port got stuck somewhere in the Middle East because in their previous journey. So we knew that we were going to run out of coal. Of course, we actually have certain alternative for like HFO. As Raghu mentioned, HFO doesn't have much of a high demand. So we managed to source some of the HFO from Chipetco as well as IOC, but that is 5 times more expensive than coal. So to manage the crisis temporarily, we source some of the HFO stocks that we have. Actually, we borrowed a little bit of coal from Brandix and TJC because they used to import through us because they don't need big quantities, so they bring in hatches in what we bring, import. So, but it's also not enough, so we knew that we were going to run out. So we have been actually investing in a different way of processing, co-processing waste to replace the expensive fossil fuel. So we have been investing over a period of time. Luckily, we had that facility, so we actually increased the the usage of waste from other industries. Waste, oil, sludges from the boilers, from the garment industry, even rice husk, sawdust, anything in the garment region. So we maximize the usage of waste instead of coal. So like that, we manage for about a week. Of course, with waste, you can't run the kiln forever because it actually brings your production down. So it is also not good because that is the most profitable product. So that's how we manage in the short run. And also we had a problem. One of our products are packed in PP bags, polypropylene, which require the resin, which we managed to quickly shift into the paper with several plies or several layers. So that is how we manage temporary during the crisis, but in the long term. So all these material which used to come from the Middle East, we now switch to China. Clinker is now coming from China, which is quite new, because you cannot change very quickly these supply sources because there is a long process. You have to test the sample, you'll have to get the approvals from the SLSI, then you'll have to wait, see how it performs up to 28 days and so on. So it's not easy. Then, of course, we used to import another material called gypsum from Oman, which we now move to Thailand. And also, as a part of a small group of companies, our parent company in Thailand has an investment in one of the coal mines. So we have now asked all of our peer companies in Vietnam and especially in Thailand to always keep a little bit higher stock in case of emergency like this that we can borrow from them, because the shipping between these two sources are not that difficult. And also, actually, one of the companies has a small investment in the shipping company. Now we are trying to actually lock into a smaller vessel which actually operate for us in the region. So these are some of the long-term things. And also, there are actually, when we looked around, there are traders, especially the commodity exporters in Sri Lanka, who has excess US dollars. So some of them are willing to build warehouses and bring in clinker, not in a rush. I mean, they are willing to bring and store and sell us on a consignment basis. So whenever we draw, we pay. So of course there will be a cost, but as Asita and Raghu mentioned, that losing customer is the biggest loss. So we are stretching as much as possible all this. And of course, in the other way, that what we are trying to do is, now we know the best option long term is to increase the local production. So to minimize the dependence on the import. So for that, actually we can use this waste from other industries more and more, but we'll have to modify our processing system because using waste as energy is not easy. It's a long process up to the feeding and all that. So this year we are investing about 1.5 billion rupees to make modifications to our processing system to increase the intake of waste instead of coal. So we can locally source from other industries. Actually, even now, a lot of multinationals are working with us to dispose all their waste and rejects and so on. So this is how we are looking at. And also, the clinker is the biggest component in cement. So we are trying to look at certain different material you can use, which are locally. One is the fly ash produced by the Norachori power plant. So there is another type called bottom ash, which cannot be used as it is. So we are now spending money to move one of the idling grinders from the south to our main facility so that you can bring this waste and convert it to a usable fly ash so that you can reduce your clinker component, which is the material exposed to these issues. So these are the few things, but some are long term. You'll have to spend money, but then going forward, our dependency on most of these imports will be gradually reduced. And that's how we are looking at things now.
Thank you, Mr. Kanaka. I think that also connects with what Hasida mentioned in terms of, clear, Raghu mentioned they are considering of diversifying sources to bring the cost down. And what I see from Mr. Kanaka is, as you can see, the trade is now shifting Because earlier they used to source it from Oman, now it's shifting to Thailand. And at the same time, even the innovation comes into play. Earlier it was polythene, and now you have to move to different ways of packaging. At the same time, the supply chains are also shifting, and you're looking at more sometimes the domestic manufacturing on the other side. So you, as you can see, it's navigating from one era to the other. With that, I would like to bring my attention to Riaz. Now, the digital connectivities, while we all spoke about manufacturing and all these commodities and energy, digital connectivity is one thing that we all are depending on. And of course, AI is a new, I'm not sure to call it a threat or opportunity. I'm sure there's both sides is also coming up. So as a professional in the telecommunication industry, what's the biggest geopolitical risk that you see on the digital infrastructure and how we should prepare for it?
Yeah. Okay, so thank you. Yes, thank you for the opportunity here. So let me first start with what our business is. Our business, to a great extent, we split it into two categories. One is a consumer business, which most of us know, which is the data, voice, SMS, WhatsApp, the whole works. Then we have the enterprise business, which is the bigger chunk and which is the more complex one, where you have cybersecurity to submarine cables to solutions to all the enterprises. So we have cloud where we have data centers where we host a lot of information about customers, from customers to customers in our data centers. So this is where the biggest challenge is. Yes, connectivity, if we give the connectivity to our consumers, people will be okay. Yes, of course, that has the same challenges, both the industries have. For us, one of the biggest costs we have is energy. I think Hasita was saying, he was talking about fuel. I was just thinking how much of fuel could be stocked, because we have to stock. For us, we run on national grid most of the time. We have generators, we have batteries to keep all our base stations on. So there's a limit you can stock fuel. So what happens if fuel dries out? So that's a big crisis. We need to be ready to overcome these things. But on the enterprise side, the challenge is very, very different. So every time, the mornings when I wake up, first thing I see is any cable cut. Because SLT has 5 cables live and one should get lit up early next year. So all these cables take all the data in and out of Sri Lanka. Imagine one of these cables get cut. It's going to be very challenging for a country, for an economy. So we do have a lot of redundant parts, duplicates, etc., to overcome. But still, that's a big crisis that we need to manage if it happens. So every now and then you see, like the way they close this Hummus or whatever the strait, they are also threatening to cut the cables. It will not only impact us, it will impact part of the world. So this is one big challenge we have. The second is the data centers that we have. These data centers cannot go down, whether we like it or not. These data centers have to have sufficient energy, have to have sufficient people to make sure it runs smoothly, and also make sure that there is enough hardware and software that is supporting it on an ongoing basis. So one of the biggest challenges we have seen with this crisis is the shortfall of hardwares. The chip prices have gone 2, 3, 4. Now it's running into 10, 20 times. And what happens? One is the price, but the bigger price is not the price. Even if you pay a higher price, you can't source them. There are big, chip users who have blocked for the next 3 years. They have just blocked the orders for 3 years. So one of these things that we have tried to do well is, reach out to our relied suppliers and start getting stocks even at a higher price from somebody so that, you continue to keep on increasing these sources because two things. One is as demand grows, you need more and more hardware as well as you need to also recycle. You can't run on old hardware after 5, 6 years. You have to keep on recycling. So this is another big challenge we are facing as industry. So first one is definitely the crisis on energy. Second is the shortfall of hardware. And then the third one is the people. The qualified people are in demand. So these people move around and the sad part is a lot of people moved out of the country. So this is a challenge we have. So we need to make sure that we groom new people and, bring them up to standard. Yes. So that's where our business is. Going back to AI, AI is a evolving thing. We started AI probably 10, 15 years ago. A lot of people didn't know what AI was. Then suddenly it woke up. Then from AI, we have gone into Gen AI. Then we thought, okay, that's where the world is heading. Now we are talking agentic AI. So I was in a conference a few days ago. People were talking about not people interacting with agentic AI, agents, dealing with other agents. What happens to a world when an agent, an AI agent, deals with another agent without a human in between? You don't know what will happen. It can be so very complex. So we need to be very, very careful. So one of the biggest challenges we are very worried is about cybersecurity. Most of our clients, we always tell them, please invest, please make sure you cover yourselves with cybersecurity. Because the day agents start talking to agents, it can disrupt a lot of things. But I know a lot of corporates, a lot of government institutes don't want to take the first step of making sure you cover yourself. Because the cost is also not cheap. It's also very expensive. And you don't know what the cost, what the damage could be. So if you have not gone through it, you're very reluctant to put money on the table for a risk that you don't know the quantification of. But we have tried, not that we have tried, we are trying in every forum to educate right down from the CEOs, the CIOs, to the CNOs, saying that this is a risk that we as a country cannot take. And we should not even go in that way. Yes, AI has its own positives, own benefits, but you also need to be sure of the risk that is there.
Thank you, Riaz. Thank you very much. I think it completely shifts our thinking, because now while we have thinking about the geopolitical risk, now we have to think about a cable cutoff and also about our data centers and the people's risk, and also very importantly, the cyber security risk. I'm sure what led the headlines for the last few weeks was also on the challenges with the cyber security. With that, I would like to move to Talal. Okay, now there are so many risks, and of course, we understand all that. But at the same time, we understand the trade is shifting and things are changing and behaviors are changing, as we discussed. As Professor Pinto said yesterday, the crisis has become kind of the new normal. Even when I spoke to Raghu in the morning, he said, no, we are dealing with every day, the same thing, and risk has become normal. Aren't there a realistic opportunity for Sri Lanka to navigate through this? Because while everyone is shifting, I'm sure we can also fit somewhere else and maybe take an advantage of it. Is there an advantage, Talal, on an economist lens, on an economic point of view? Is there an advantage for Sri Lanka to capture and maybe either bring down the cost or explore another industry? Is there an opportunity for Sri Lanka?
Thanks, Narnatha. And first of all, my thanks to Professor and CMA for inviting me. So with this crisis, of course, we've talked a lot about the Middle East crisis and its impact. But then there are things, before I get to the answer, I'll just talk briefly on the impact, especially through the IMF report, because as we know, as the other speakers spoke, there's a lot of impact coming from the Middle East crisis. But one thing in particular is that due to this, our reserves have been projected to come down. So as we, at the end of 2027, we are only expected to be at $11.8 billion. So which is much lower than the earlier projections. So that will have an effect, which also means in 2027, we have to increase our reserves by $3 billion, which includes issuing an international sovereign bond of $1.5 billion. So in order to do that, we have to get our credit ratings. So this would be one of the stepping stones, the key issue that has to be sorted. But talking of the disruptions to the Middle East, of course, as we know, it's global information. But there is also another thing that's going on also, which has, which will have effects on us, but at the same time, which will also bring us opportunity. That is the growing geopolitical rivalry between the US and China. So there is, on one end, you have the United States, of course, and on the other side, China, Russia, and probably North Korea and Iran. So the reason I say this is because now it's shifting. We all see trade wars as something Trump started probably at a minor scale in his first term. But then what people don't notice is that some of the things he put in, when Biden became president, he continued. So it's like we see a point where it's not going to be, most people think that in 2028 Trump is out and we will all be back to normal. But I don't think that's the case. Because now you see the US economy has got to a place where it's unsustainable. They can't go on having $1 trillion deficits. So there will be change. I don't think it will be as extreme as how Trump is, but it's going to change. And the other thing that is a bit more worrying to the world is also the EU is also getting into action regarding China. Because earlier, China was mostly doing the low and middle end manufacturing, which was not affecting the major economies. Of course, the US started worrying about it, but now the EU is also planning to put some sort of an action. There are sources coming from certain countries within the EU to put a 30% tariff on Chinese exports. So this will have another impact of further pushing China. And if you know China's economy, it's not based on consumption. It's based on exports, driven by that to a large extent. And when you have the US and EU also pushing back, smaller countries from Asia and Africa cannot absorb it. So you have this China with huge overcapacity going to flood the entire world with cheap products. And that is going to be a worry for many. And it's also going to be an issue for industrializing for countries. I mean, there was a recent paper by the Peterson Institute. Now the American and EU heads are worrying about China. But all these years, the actual hurdle for developing countries not to develop was coming from China because they were, I mean, we can't blame them. Of course, they can produce at a much larger scale. But also now, I mean, even if I saw a report from Deloitte last month, it shows that, of course, they have incentives for exporting this thing. Largely, they give it through lower interest rates. So these are areas where there is always going to be friction now increasingly because it's not sustainable. But as far as opportunities go, I see three areas. One is ports and logistics. That is going to be a huge thing, especially now with the Middle East crisis. It's a frozen war. It's not going to end very soon. Even if there's a ceasefire, it's not going to. I think as long as the regime in Iran is there, the West and especially Israel will want to keep it in check. And now that the Iranian regime has found out that the Strait of Hormuz is something they can hold on to hold the entire world at gunpoint, literally. So that is going to be a sort of this thing. And especially the ports of Jebel Ali, they're not going to be the same again. So Sri Lanka is perfectly fixed on this. And also we have India. So we are dealing with transshipments. So ports is definitely one thing. And what we have to do, of course, is one of the things through investors is the cap. Foreign ownership is capped at 40%. So they want to allow this in. So I mean, even many countries such as from UK to even China, they allow this. So we need to have the multinational companies in this field. The second thing is, of course, tourism. When a large part of the world is gone, I mean, we saw the Russia-Ukraine war leading to increase in tourism here. That is another opportunity that Sri Lanka can look in, especially in regional terms, especially with the rise of India and a huge middle class coming there. And lastly, I would say the opportunity is renewable energy. Renewable energy, we have abundance here. All we need is investments. And it also protects us from further crises, which I can explain later. But just to finish off my answer, if you're asking about opportunities, I would say the single biggest opportunity at our hand, and I'm speaking very realistically, is our neighbor to the north, India. So by 2050, India's economy is expected to be $30 trillion. And so just so people understand, currently the US economy is just around that much. So we are going to have a United States size economy just 50 kilometers north of us. And Tamil Nadu's economy, that's the closest state to us, is going to be a $4 trillion economy by 2050. So that I feel is the biggest opportunity which we have to focus on. I don't mean that we have to have bad relations with other countries. Of course, we need excellent relations. But when I speak to, if you look at New Zealand, about 90% of their attention is drawn on Australia. If you look at Canada, 80 to 90% of their attention is on the US because that's what's important. So Sri Lanka, if you look at it, who is our actual neighbor? Of course, we term everything as South Asia. But if you look at it, I mean, the distance from Sri Lanka to Nepal, it's almost the distance from Sri Lanka to Oman. So it's just that we were called South Asia by the Europeans. But in actual terms, who is our neighbor? Just Maldives and India. So I see that as an opportunity as we were both in the conference in Delhi 2 months ago. We see a lot of interest from their side. I think the focus really should be on how can we capture that. Because when you have such a huge market coming up and rising, that is where opportunities.
Thank you, Talal. Thank you very much. I think the first round I found it very, very insightful because we spoke about the practical examples, what's happening in the manufacturing sector, what's happening in telco and also on the energy markets. At the same time, Talal brought a new dynamic because we are already in an IMF program. Because for all these investments, you need dollars and you have to have reserves and you have to have constant inflow of dollars to make all this happen. At the same time, there are other shifts that is taking place. That is also the development of India and at the same time, other ports and renewable energy, all those aspects. So that's the first round. But before we move on, I would also like, you can also join me questioning these esteemed panelists. Please send your questions to Nord 77 329 8199. Nord 77 329 8199. Nord 77 329 8199. If you have any questions, please WhatsApp those questions so I will get it straight away. And we can post those questions to our esteemed panelists. Now I would like to move to Hasita. Now, a lot of accountants and professionals where they get stuck is kind of, sometimes they get to know all these information, but really how are you going to make it apply in the real world? And that's where the businesses needs permanent kind of changes in the way that they have been working. Can you give us few examples with the geopolitical shift? Because I remember when we met at the previous panel discussion somewhere, you said like you had a time frame that if the war going beyond 30 days, you consider it midterm, then you're looking at for 90 days. And if it's beyond 90 days, you have a different strategy. I would like to know something similar. What permanent changes that you have done in your business life, maybe in your even personal life, to get prepared for this navigating with the new geopolitical risks and these trends that are coming up?
Yes, I think you were referring to 2nd of April, if I recall correct. In one of the panels we were there, so we were talking about within April and June, if things don't end, what should be the strategy? It will look very different. And now you look at, we are in July, it ended, but it restarted. So I think the model that, like I said earlier, is that the start and end will happen multiple times, and how do we really now get used to this and play? So the key answer to your question is, there is a cost embedded in managing this volatility and risk. And that we have to factor into the P&L. Probably there are no shortcuts there. If you try to take shortcuts in some of those areas, you might have a bigger problem than that particular line item of cost. But what we have done, I think from a Brandix perspective, to just share some experience, is that when the additional cost came in these areas, and I'm not only referring to this Middle Eastern situation, I'm also referring to the tariffs, because for the last, maybe from April 2025, this whole roller coaster has been moving up and down. So in the tariff time in particular, we were more impacted than this situation, where the prices came down because our customers came and told us, here is the tariff of 20%, you have to share this percentage. So we had to negotiate hard and ultimately ended up taking a fair chunk of that tariff exposure. And that almost wiped out margins, like I said, in most product areas, and was a huge challenge to see how we can turn back to profit. So what we looked at was that everything out there is not in our control. Someone else is taking decisions over a phone call, over a midnight dream, right? And when we wake up in the morning, something else has happened. So that we can't control, and we should not even try to control, but instead, we should focus on what is in our control. And that's where we looked at our cost structures, our raw material sourcing strategies, and also went deeper into some of the legacies that we have been doing and questioned everything that we have been doing in the past and see what should be the new work order. And that was a transformation. I must say that we've been doing in a transformation program in the organization from 2023. But what we did from the last year, last 12 months, probably is much more than what we did over the 2 years, because the gun on the head, pressure on, we had no choice but to take some of those tougher decisions. So those decisions that we took are actually helpful now, and they have more permanent, and those are permanent shift in the cost structure to say that we will improve the productivity and reduce the cost so that our cost per unit comes down. And even in this new world of additional tariffs, additional cost on utilities, freight cost, all of that, our cost per unit is still competitive compared to the global competition, so that we can retain the orders even at that lower price and ensure that we still make some money. I think that setup, Dharanath, is the most important change we did. And in that change, we took decisions that we were hesitant to take for years. When I say years, for decades probably, right? But unfortunately or fortunately, those decisions had to be taken, and they were very, very tough, sensitive decisions. And with those changes, I think we are seeing a new normal, and embedding into that was technology. And that's something, like I said before, it's happening. AI is happening. Don't say that AI is a buzz. Sometimes people say that AI is only a buzz. That's happening. Yes, it's correct that the buzz is much bigger than the reality. That's always the case. But the gap need to get narrowed, and it can be done. And if you play the game properly, I think there is plenty of opportunity in that space for you to drive the productivity up. So, single answer to your question is, handle what is in your control, and that's where productivity comes into play. So productivity is the name of the game.
Thank you, Hasita. Thank you very much. Next, I would like to move to Mr. Ekanayaka back again. Now, as cost accountants, and as Hasita mentioned, there is a cost for this resilience. And at the board level and at the business level, ultimately, you have to evaluate this cost against something else. Of course, we know, as you mentioned, losing the customer is the biggest cost. But is there do you use any techniques to evaluate that? Of course, I know it's, not a simple way of like what cost is higher. But is there are tools or techniques that you use? Because this is also so complicated, because there's a massive upstream and downstream impact. Sometimes you cannot cost at the beginning, and it adds at the latter part. So just share a few tools that you use, or what the accountants or these professionals has to think about to navigate these difficult times.
Yeah, of course, we don't have a predetermined point of, making a decision saying, okay, enough, because in our case, we are a 100% foreign-owned company, and they are invested $400 million, which is on the ground on tangible assets. It's not easy to run away. Only thing is that they can delay the return. Now, for example, when we invested, they are, at that particular point in time when we made the forecast about the country, it was, booming construction industry. It was actually determined as 10 years payback. Now, already 10 years gone, we haven't even recovered half of the investment. So basically what we do is, since as Hasita also mentioned, now I didn't mention in the previous answer that we have stocked up everything until end of the year. There is a cost, the cost of carrying so much. But of course, we have a strong balance sheet, as you mentioned, so we can do that because we don't want to lose a customer. Because then you have a very different outcome, because we have exclusive distributors that they will not have a product to sell. And also we are in an industry and the largest manufacturer of cement in the country. The construction industry is the largest contributor to the national GDP. So it has a much more consequential losses to the country also going forward. So what we do is, initially we are able to sacrifice the net margins. What we do is, as long as possible, you pass some of the cost to the customer, looking at what the competitors are doing, how the market pricing is. Then, of course, we, together with our distributor, they also keep certain margins. We both agree to sacrifice some of our net margins and basically lower our net profit. Some of the tools every month we do this, margin analysis, including the segment analysis. So which segment is actually, we are losing more. Now we have basically this business to business or our infrastructure and so on, and also the retail house builder market. So which is still about 70-75%. So we look at these two segments and look at each, even the customer-wise, what we are making as net margins. So at some point, probably, if you come to a situation where you'll have to start making gross losses, then of course, probably there is a trigger point that you'll have to think about maybe phasing out some of the low margin, like when you import raw material and make, the margins are lower. So maybe you stop that and stick to your local production where you have quite a lot of buffer to absorb. So this is how we, on a monthly basis, we look at customer segment-wise, product-wise, all the margins, and we somehow make these decisions whether to continue. But so far, we have not discontinued anything. And as I mentioned, we will fight tooth and nail to the last minute because you cannot just run away.
Thank you, Mr. Kanaka. Next, very quickly, I'm moving to Raghu. Now, you mentioned you run a lean organization, and from what I hear, because one of the first principles of lean organization is you minimize the stocks, because stocks also has a cost. But now it seems you have to keep stocks, and that's what Mr. Kanaka said. And also you mentioned in terms of diversifying sources and things like that. So on two things, what energy security looks like for Sri Lanka on one end, and to have that energy security, actually, are we moving away from the traditional lean structure that we have been practicing as cost accountants for a long time?
I'll just like to start with a caveat that every time somebody says that data is the new oil, then the oil erupts. So that is and it always reminds us that how the economies of countries run and how much we are dependent on energy. So energy resilience definitely becomes a very important point. As you rightly said, when we run a lean organization, we always look at the optimum level of stocks. But as of today, see, in an oil industry, it is not important how much buffer you keep. Have you kept the buffer at the right price? Because we are major importers, so have we kept the buffer at the right price? So many a times, and in a country like Sri Lanka, you cannot keep a buffer for very long also, because we have storage issues. That is one of the bigger challenges which Sri Lanka faces, that can we really keep buffers for long even if we want to? So that is one major challenge. When I look at the Sri Lankan energy landscape, then there are definitely certain things which we can really deal with. Number one is, if you look at today's pricing, see, the top line pricing is crude. People say that crude has gone to $90 or $85, and that is making the product costly. But for a country like Sri Lanka, which imports finished product majorly, crude may play a role, but does not play that important a role. The main role is played by the finished product price. Today, if you see the morning, the crude price is about $88, while the diesel, or what we call gas oil in our parlance, is at $146. So 88 to 146. So there is a difference of $50. So anybody who has a manufacturing facility buys the product at $80 plus premium, manufactures with some $10, $12. So he reaches about $105. And he can still, even if he doesn't charge a premium in the market, still sell it for $140. So that is the kind of premium which is available. So in Sri Lanka, first of all, we need to have a major investment in producing our own product. That refinery investment or a refinery modernization definitely plays an important role. Mainly one for energy security. Second, also for the modern products which are now available in the market. If you look at world over, has now moved to Euro 6 with about 10 ppm sulfur. At Sri Lanka, we are still allowing 500 ppm sulfur. So that is the thing. Most of the world, I think, has moved to Euro 6 maybe in 2010. So that is a big challenge. So that affects the environment, that affects the customer. So we need to definitely make strong investment into our refining. Secondly, storage. See, we don't have refining capacity, and if the product, see, all of us in this industry, as my fellow speakers have said, are doing this risk planning, scenario building, they know, and we are always looking at the various ASTM, MOPAG, MOPS, all these things. We know what the futures hold like. So all of us have built in all these AI systems to predict, try to predict. So nobody can predict, but try to predict at what price we can get in. But even if we have a buffer stock, it can hold on to for a limited period of time. So buffer stock definitely required. So we need to have investment into that. Thirdly, I'll finish it off fast, yeah. Thirdly, we need to, as everybody said, alternate energy. Alternate energy because it is a great equalizer in the world. Not, it is not that few people hold the source of alternate energy. Everybody holds the source. So alternate energy, definitely we can look into it. But I am seeing that alternate energy can be a balancer. It cannot be the primary stuff. So that is still 20, 30 years away. Then most importantly, we need some kind of pricing stability. See, today in the market, nobody knows at what price the product is going to be sold. So if I don't know what price I'm going to realize, why will an investor invest? So if we need all these investment, we need investors to come and invest. So we need pricing stability, and at the same time, government may need to cushion the various issues. So at that time, some kind of digital interventions which we can bring in, because of Sri Lanka has an NIC number, so it can look at even direct transfer of subsidy or something like that, which may cushion the people who really require. When you are giving a direct pricing subsidy, you are actually subsidizing even people who don't require subsidy. So that adds to the cost on the government. So, and then finally, I also look at the various policies, policy stability. Policy stability is very, very important. If the policies are going to change, I don't find anybody coming and investing. And energy is an ecosystem. Please understand, no one person can guarantee energy security. The whole system, whether it is government, whether it is the companies, whether it is the public who are handling, they all need to get involved. And I think if we are getting all these things, we should be in a position to provide energy security to the country.
Thank you, Raghu. Thank you very much. I think we got a comprehensive analysis of what the energy security looks like. I will quickly move to Talal before I come to Riaz. Talal, just tell us now, it was said life is all about 90% of the, 10% of the life is what happens outside, but 90% is how we react to it. Because all those things are very difficult to control. So what the domestic environment has to change in terms of preparing for these changes? Raghu mentioned about policy consistency, that's one thing. But maybe in terms of particular policies, you brought about some opportunities at the same time in ports and logistics. Raghu mentioned about how it's an ecosystem, why the pricing stability is needed. But what at the government level, at the public policy level, the domestic changes that we can do?
Yes, thanks, Tarna. So just to get into that, I'll just briefly mention about the changing environment as well. Because there are two factors why the global environment has changed in terms of investments and trade. One is it's tougher to get access to finance for the at the government level, I'm meaning, in terms of better interest rates or investments, because one thing is a very large portion of investments is going into AI. You look at the UN report, 20% of all FDI is going into data centers. So that's tough. And even the latest UN report shows that about more than half of the investments go into developed countries. So the developing countries are left with a much smaller pie. And also the other fact is the world is at record high in terms of public debt. The US government debt is high. Every major country in the world, the debt has spiraled almost out of control due to COVID and the current crisis. So that means that when debt is high all over the world, interest rates are also high. The governments will have to pay higher interest rates in order to finance themselves. So Sri Lanka is facing these challenges in addition to that. So investments going into strategic sectors and the fact that public debt, including Sri Lanka's debt, is much higher. So what are the things we can do? Of course, broadly speaking, foreign direct investments and export driven economy. These are the basic things we can do at the moment in a broader sense. But in terms of foreign direct investment, currently I consult for the European Union, so doing a report. But even if you look at, for example, data which is in public view, the World Bank enterprise data, Sri Lanka fares very, very poorly on almost most of the things. So you might think we fare badly against, for example, Singapore or Malaysia or Vietnam. But even among our South Asian peers, we perform badly in almost most of the cases, even with countries such as Nepal, sometimes Bangladesh, Pakistan, India in some cases. So here again, the challenge is the most critical. One example is obtaining licenses. According to the World Bank survey, it's 23 weeks. Most of the other South Asian countries, it comes less than 10 weeks. So here are factors that keep things away. So many things, tax administration, when it comes to perception, the worst in South Asia. So a large, but the key thing has always been inconsistency of policies. That is almost the number one thing. The second thing is lack of coordination among government organizations. So even large investments from renewable energy, who I have personally spoken to, they have waited for almost 2 years left because different government entities cannot coordinate among themselves. Land is an issue. There was a Japanese firm which is trying to negotiate with the government because land is owned by different railway department, urban development, municipal councils for almost 10 years. Try to get a lease agreement. So if we don't sort out these basic things, we can't get foreign debt. And these are mostly, as we say, stroke of a pen, you can do these things. But that stroke hasn't come. Renewable energy is one thing, because even if you look right now, we are bleeding $500 million a month because of import of oil. So renewable energy can ease it. As Raghu mentioned, we cannot entirely rely on renewable, but this can reduce the pressure to a certain extent. SOEs, of course, if you look at so that is one thing we have to sort out. I think Advocate also talks on this. Total accumulated debt of Sri Lankan Airlines comes to over roughly around 450 billion rupees. So you could have built, that's equal to the cost of 5 Mattala airports. So just gone down the drain for one airline. So these are certain things you have to do, and tough decisions are needed. So of course, the biggest barrier would be regulatory, deregulating most of the things. It's largely red tape, government bureaucracy. These are the most critical things that have to be sorted.
Thank you very much, Salal. I'm getting so many questions. If I get all these questions to our panelists, I think I can go up to lunch, but I'm not going to do that. But I'll pass one question to Riaz. Somebody is asking that you mentioned about the risk factors, but also can you explain a little bit more about the mitigation plans the company is taking at the moment? I think you mentioned about diversifying suppliers, but in terms of chips and the people content, I mean, the people's management front, and if there's a cable cut, or is there any mitigation options that you are considering at the moment?
Yeah, of course, definitely. Without that, we will not survive. We will not survive as a company. We will not survive as a country. Yes. So first, let me look at the submarines. Yes, submarine cables. So as I said, we have 5 live, and one is going to be live probably in Q1. And then we also have other submarine cables in the country. So we definitely do have redundancies linked with those. That's something that we have on the cable side. On the hardware side, we have spoken to most of our suppliers and blocked some production for us. Whether it's hardware, whether it's batteries, whatever the chipset related stuff, we have blocked some capacities for us. Of course, it's at a premium price, but that you have no choice. As the other gentleman explained, it's not about what price you pay, but it's more to secure your supply chains. That's something that we have done. With respect to training, yes, I think we have taken a bold step. We have about 8,000 plus employees at SLT Group. So we have said every employee has to go through at least one formal training on AI this year. So that's something we have ventured into. We have already completed about 25% of the population. So that's something we'll do. The whole idea is to, make sure that everybody understands what AI is. Not that everybody will use AI to that max level, but people will understand AI and try to start, venturing into that. That's something that we will do. And then buffer stocks at our end, we have increased buffer stocks. because we are a rupee earning company, predominantly rupee earning company. We do have some dollar income, but most of our investments is all in dollars. We import from the fiber to everything we import. So because of that, we have started increasing our buffer stocks so that, yes, we have some capacities that we have built in. So one more thing, if I can, based on what Taral said, he said 3 areas to look at for Sri Lanka. There's also a 4th area that we are exploring. Given the crisis that is happening in the Middle East, everything is not gloomy and gloomy. We have some silver lining there because Sri Lanka is situated in a place with all these cables that we have. I think country has about 10 cables. We can move the data centers from the Middle East to Sri Lanka. And if you can get the big players, the Microsoft, the Azures of the world, the Googles of the world, and then relocate them in Sri Lanka, this economy will boom. Okay, one big challenge we have is the price of energy or price of electricity, because these data centers needs cooling. Some people even put it under the water. They seal it under the water. So it needs a lot of energy to keep it intact. But if we can break that, of course we are working on that. If we can break that, yes, that is definitely a silver lining in this whole geopolitical issue. And yes, we have a goal of reaching $15 billion in 2030, right? From the digital economy. So this is one of those initiatives. So I think we need to gear, all of us need to gear to embrace this. This cannot happen by a few companies. Take $15 billion as a target on the digital economy, and it's split among how many companies, how many people. So this is incremental. So look at it. I think as accountants, we need to, look at what is also positive in this whole picture.
Thank you, Riaz. My final question is to Hasita. That is, someone is asking, how is the impact and outlook of Sri Lankan apparel industry exports in slowing down world economic environment and various new tariff proposals like forced labor tariff on Sri Lanka?
Yeah, so though the economists talk about the slowdown in the global economy, especially the US economy, so far the good news is that we are not seeing a significant impact into our order books. Our customers are still buying and things are moving on, particularly in the US. Europe, there is a little bit of a slowdown, but still things are moving in the right direction. But also the rest of the world, there is a bit of an improvement in the buying. So overall, there is a diversification of the order books going beyond the traditional markets in the US and in the Europe and coming into some of the other Asian markets, in particular India, to specifically talk about, but also some of the Southeast Asian markets as well. So through that, I think we are holding the demand so far. At least we have clear visibility till about December, January, which looks promising. And beyond that, also we are seeing projections, but looks relatively okay. But having said that, we need to keep a close eye because these things can change overnight with the type of volatility that we are talking about. But one of the things that I want to highlight from a Sri Lankan industry perspective, or at least how Brandix we are looking at it, I mean, the clothing industry is a huge industry, right? There is almost $500 billion of apparel buy in the world today. And we are exporting only $6 billion of apparel. So in a 500 billion, 6 billion is virtually nothing, right? You don't have to worry about your order books. But just one factor need to come back. That's what I was talking about right through my presentation as well as through the question you asked earlier. What's our value proposition to the customer? If you have the right value proposition to the customer, demand is not a problem because 6 billion out of a 500 billion is almost a drop in the ocean. So what we have to ensure is that, are we competitive on cost? Are we productive? Our productivity and efficiency is right up there with the rest of the world. Are we creating new products that we can match our competition's offerings? Can we ensure that our lead times, agility, and the resilience in the supply chain can deliver on time even during these multiple shocks that we are going through? Now, if these points can be addressed, order book is not the problem. It's how you address this is the problem. So I think companies should focus the attention towards that and ensure that our 6 billion can be 7, 8 billion, or we can't be a $15 billion apparel exporter. We don't have that kind of capacity to make the goods in the country, right? That's out of your range. But to increase this number with a reasonable growth is something that you can do, provided we get our value proposition right and we keep polishing that value proposition and ensure that we drive that in a way that we are not just having islander mindset, but we see that our competition is in the world, they are global players, and we fight the global competition with the right niche value proposition in hand.
Thank you very much, Hasita. With that, we are going to wrap up the first panel discussion. I know the time is up. I think we ran about 10 minutes over. But as it says, I wish that I could have been just in time. But I had to also, like the geopolitics has a cost. I had to also evaluate the cost of, because I found the conversation was quite insightful. So I thought it's better to extend it by 10 minutes, but I don't want to extend it further because it's going to cost your tea break and the lunch break at the latter part. So with that, ladies and gentlemen, please put your hands together to Talal Rafi, Mr. Nandana Ekanayaka, K. Raghu, Mr. Riaz, and our keynote speaker, Hasita. Thank you very much. Over to you, Arun.
Thanks very much, Dhanas. Now, we would like to invite Professor Lakshman Wadawala as well as Dr. Patabandige on stage to hand over some tokens of appreciation to all of these fine people who have taken us through this very insightful first session. Okay, we'd like to invite the SAFA president as well on stage. Mr. Kabir, thank you. So, here we are going to be handing over tokens of appreciation to all of the panelists as well as our moderator.
So we begin with our keynote speaker, Mr. Hasita Premaratne. Then Mr. Riaz Rashid, the Group CEO of Sri Lanka Telecom. Mr. Nandana Ekanayaka, who's the chairman of Siam City Cement Lanka Limited. Mr. K. Raghu, the managing director for Lanka IOC. Mr. Talal Rafi, the consultant economist. And of course, our moderator, Mr. Dhananath Fernando, the CEO of Advocata Institute. Also, we have a very special token of appreciation to be presented to the coordinator of our technical sessions, Dr. Sugit Patabandige.
Yes, one more to Dr. Patabandige as well. Okay, so the moment is being captured on camera, but we would like to mention with appreciation our many sponsors. So I'm going to read through our list of sponsors, and we would like to say thank you very much to our platinum sponsors. There are two: Lanka IOC PLC, Diesel and Motor Engineering PLC. Then also gold sponsors, we have Abans Group, Selinco Life Insurance, DSI Samson Group, Haycarb PLC, Siam City Cement, and Union Assurance PLC. Those are our gold sponsors. Then we have silver sponsors in OTR Engineered Solutions Lanka, Built Element Limited, LB Finance PLC, Rampat Group of Companies, that's known as a Leaf Digital Printing, then Singer Sri Lanka, Soft Logic Insurance PLC. Then we have our print media partner, Vijaya Newspapers Limited, and business relations partner is the NSB or National Savings Bank. Then the assessment partner is Pearson VUE, and the official telecommunications partner is SLT Mobitel, and Dialog Asiata PLC is the official payment partner. And the official automobile partner, we would like to mention that with much appreciation, Stafford Motor Company Private Limited. And we have a little message.
Yes, as you're taking your tea break, you have the opportunity to view Honda products that are available. And as a valued CMA member, you and your associates can enjoy specially curated offers on the all-new Honda CR-V and the Honda HR-V Hybrid. So you can visit the exhibition center downstairs and speak with the sales experts to find out more about those deals as well.
Right, so as we said, it's downstairs. So as you exit, you need to move down the stairs to the lower level. That's where the tea break or the partaking of refreshment is. And the exhibits are also there. And we have only 20 minutes, so if you can beat the speed of light, you'll be back here.